Everyone to stick with us versus herd. If it's your first time here, you like the content, hit subscribe. If you want to get notifications for when we post videos or go live, tap the bell. And if you want to join the UVH fam, which is our community, links are below in the description for our Discord, options trading group, and our Patreon. What I'm going to be going over today is debit call spreads on Robinhood. And as you can see here, I'm operating with a small account on Robinhood. Robinhood is not my main broker, but I find that Robinhood, it's pretty good for buying and holding, and then doing some spreads. So I'm going to kind of show you, debit spreads are some of my favorite, especially in a low volatility environment. So when IV is low, implied volatility is low, you want to look for more of a debit. So what is a debit versus a credit? Debit means I'm going to actually be paying money for the position, versus like a credit, I would be receiving a credit for that position. So that is why, obviously it's called debit call spread. So all I'm going to do for example purposes, I'm just going to use SPY. You want to make sure that you use a liquid stock. You want to make sure that there is liquidity, and it doesn't matter if you're trading spreads or not, but it's just kind of a general rule of thumb. Looking for a volume of 500 and over. As you can see, SPY is at just on this one strike 11,000. So we're gonna be good on liquidity. For example purposes, I'm probably gonna be losing money on this trade. I'm gonna show you how to actually open and buy and sell the trade. But for example purposes, this trade is not planned out. I'm just doing it for the video, just so you can see how to open and close the trade. So I'm probably gonna lose a couple bucks here. Not a big deal for the trading purposes, but just be aware I'm not going to be trying to make money here on this trade. So why would you put on a debit call spread? A debit call spread means you want to be long that stock or ETF. It means you think that the price is going to go up. So on SPY here, let's say right now the price is 307.16. Let's say by November 6th, we'll push that a little bit. Let's say by November 8th, I think it's going to be above that price. So let's say I think so let's say I'm going to buy the 307.50 call, and then you would sell the 308 call. Or you can I'll show you a couple of examples here, before I actually execute the order. So you buy the call closest to in the money, and then you sell the one further away from the money. So as you can see here, I did put the trade on correctly because Robinhood does say it's a called debit spread. So this actually means I want the price to go up. Now, you did the order wrong if it doesn't say called debit spread right in here. Robinhood doesn't give you a quick way on executing a advanced strategy like this, but it does recognize when you do have that order in queue. So right now it's going to cost me 23 cents, and the one thing that Robinhood doesn't do is tell you how much the max profit is going to be. And it gets a little complicated. This is a 50-cent wide strike. So you're like, okay, so this is actually a defined risk trade, so it only costs you so much money. However, you can only make so much money. So how much money can you make from this trade? If it's going to cost me 21 cents, which is $21, because you multiply each contract, I'm only doing a one lot right here. You multiply each contract by 100, so this is actually going to be $21 because one contract equals 100 shares. So 100 is going to be your multiplier. So if it costs me 21 cents, right now it's always going to be the width of the strike. So right now I have 50-cent wide strikes. So it's going to be 50 minus the cost of what I'm going to pay here, which is, we'll just call it 20 cents for example purposes, have nice round numbers for you. So this is going to cost 20 cents. So it's always going to be the width of the strikes, whether you have, $1, $2, 50-cent wide strikes. It's always going to be the width of the strikes is going to be your max profit. So your cost is going to be 20 cents. Your max, the width of the strikes is 50 cents. So your max profit is going to be 30 cents. So for this trade, let's time this by 100. equals $30. Okay, so my max profit is going to be $30. My total max loss is going to be $20 on this. So the most I could lose is $20. The maximum that I can make is $30, and then we can kind of do the math too. Let me get rid of the 308 call and kind of show you now if I want to sell. Let's pick more of a round number here. I'm going to buy the 308 and I'm going to sell the 310. Okay. So for this, now I have $2 wide strikes, right? So the maximum this trade could ever be is $2. And then I'm going to subtract it. I'm going to say it's 50 cents. It's going to cost me 47 cents here. As you can see, it's going to cost me 47 cents, but I'm going to say it's 50 cents just for the video. So my max profit on this is going to be $1.50 times 100. So 150 bucks max profit. So that's how you calculate. You know, other platforms do this for you, but Robinhood doesn't. But mentally, you know, you'll definitely be able to get in the habit of how much money you'll make on this trade and how much it's going to cost you versus how much you can make. And you know, debit spreads are definitely good for putting on in a low volatility environment like we are in now. But I mean, they're also good trading in like high price stocks and stuff like that. You'll kind of come up with your own strategies. But what I'm going to do here, I'm just going to show you how to open this trade and then close it. So I'm actually just going to do, because I don't want to risk a lot of money for the example here, I'm going to buy the original trade that we had on. I'm going to buy the 307.50 and I'm going to sell the 308. So you buy the strike closest to in the money and then you sell the one further out. So that's how you put this trade on, and then it will say here. This is also the same for mobile as well. So far, guys, if you liked the video, I would appreciate you hit the like button. Helps me out with YouTube a lot. Appreciate it. So right now, this is going for 21 cents. I'm just going to hit continue, and I'm just going to put a one lot in there. So I'm just going to buy one. You can see here, bid and ask. Bid's 20 cents. The ask is 22 cents. Right now, mid price of 21 cents. I don't know if it's going to give it to us. We'll see what happens. Let me hit review order. Sometimes for spreads, you could let it sit there for a couple seconds and see if you get filled. So let me hit submit on this guy. As you can see here, it's actually, the price is actually dropping. SPY is actually dropping as we're doing this. So right now it says SPY called debit spread placed, and I think a lot of people get confused here. If it just says placed, it doesn't get filled. This needs to say filled in order for it to get placed, for this order to get placed. So it doesn't say filled yet. Right now it says 0 out of 1, as you can see here under quantity. And right now we're just waiting. So far nothing is happening. So I'm just going to actually replace this order and see if we can. It's going to make me go to the ask. Watch this. It's going to make me go to the ask. So I'm going to put in 22 cents right here at the ask. See if it fills. So it's placed again. Really? That's interesting. So I know that, you know, Robinhood definitely doesn't give you the best pricing on some of these trades here. Not filled. Oop, I think it did get filled. So it just got filled, as you can see here. SPY order was filled right there for 22 cents. So it just took a little bit for it to get filled, and as you can see, it's in my portfolio now under options, and I'm just going to sell this. Probably going to lose a couple bucks here, because like if you buy something and sell it immediately, you're gonna lose money pretty much every time, unless we're in, well, pretty much every time. So all you have to do, make sure you hit close here. Make sure this is highlighted close instead of open. If open is highlighted, you will be buying another one. This is a big issue for most Robinhood traders, because it does come into sometimes they're like, oh, I meant to close the order, but I actually bought another one. For some reason, sometimes it glitches and it actually defaults to open. And as you can see, you can't really tell the difference between a couple things. Other than that, that's highlighted. This says max cost, but the trade is the same exact thing. So what I'm just going to do, I'm actually just going to sell this right at the 20 cents. So I'm going to lose $2 on this just to get this closed out. So you can open and close if you have a trade I mean, if you have an account under 25K, this will cost you 1 day trade, just so you know. So I'm gonna hit review. I'm gonna sell it at the 20 cents and hit submit. So I'm gonna lose $2. And then as you can see here, it was filled. It's good to go. And now we're out of the position. So obviously you'd want to make money on this trade. But for example's purposes, we lost $2. But just want to show you that you can open and close that trade and how to do it and why you would put this trade on. So if this video was helpful to you, definitely hit the subscribe button, hit the like button. As always, stay safe, stay green. It's us versus herd.